Hey, Dan Passarelli here. Well, we had Fed Day today, which comes along about once every 6 weeks. And, well, didn't it go kind of the way everybody sort of expected? Kind of did, right? Am I lying? I don't think I'm lying. I think it kind of went the way everybody was expecting. Everybody expected a 25 basis point cut, except for a couple of crazy people. And that's what we got. And it did go up shortly afterwards and then pulled back down. It was down not quite 1%, but coming up on 1%, which is still not a huge move or anything. And that's kind of what I expected too. And then it kind of rebounded back and closed just a teeny bit down on the day because nothing was a big surprise. But what did I say? The most important thing is what happens afterwards, the conference. And the Fed does seem to be warming up a little bit more to looking at data on employment, still keeping inflation in mind, but more employment. And so that's why, even though this is what was expected, I find it kind of weird too. And I wonder if things are being set up for failure. Because look, 9 of the Fed people said that they expect 2 more 25 basis point rate cuts by the end of the year. 2 said they expect 1 cut, and 6 said they expect no cuts. So we had quite a bit of a dichotomy. Now, the Fed funds contract at the CME group, they're pricing in an 87.7% chance of a 25 basis point cut. Now, if that's something you've watched, or at least if you've listened to my videos over the past couple of years, you know that they always expect they always over-factor in a bigger cut. So, but they're really factoring in an 87.7% chance of a 25 basis point cut next time. They're going with the 9 instead of the 2 and the 6. It's just over half the Fed governors say that they expect 2 more 25 basis point cuts. So, they're really leaning with the half that's expecting bigger cuts. And I don't know. I just wonder if maybe they're setting themselves up for failure, because I don't think that really adds up to put an 87.7% weight on just a little over 50% of what the Fed governors say. It doesn't add up. That math doesn't seem to work. And then I kind of start thinking, well, maybe it makes sense that there's this dichotomy, because if the Fed felt that they had to cut rates because they've seen the employment numbers from earlier this month, which were, they're starting to get kind of low, then maybe they should have cut it more instead of waiting to cut it another 25 points next time and another 25 points next time. That's if they feel that that's important enough to make the cut. Maybe it should have been bigger. And I'm not saying that it should have been bigger or even that it shouldn't have been. I'm just looking at this from an observer standpoint and thinking about how to factor it into my trading and investing. And so why would they cut it just a fairly insignificant amount if they're worried about it enough to cut it? So are they worried about it enough that we've got to cut rates, or are they still in wait and see? Because if they're still in wait and see, maybe they shouldn't have cut it at all. If they're really worried, maybe they should have cut it more. So I think that there's a lot more of a wait and see than the market is factoring in. I think that in another 2 weeks or so, when the monthly unemployment report comes out, the monthly unemployment report comes out the first Friday of the month, that's going to be really telling for next month. That is the single most important figure that we're watching. And if it comes in looking pretty good, we're not getting another cut. And if it comes in looking pretty bad, well, then we're probably going to be, then they're probably going to cut it, and they're probably only going to cut it 25 basis points. So it's kind of a weird sort of thing today. You know? Are you in or are you out? And I don't know what the right answer is, whether the Fed should be in or out, if they should be cutting or not cutting. But this was sort of like, not even Goldilocks. Like Goldilocks, I mean, if the bed's too hard, you don't want to sleep on it. If it's too soft, you don't want to sleep on it. You just want to sleep on the one that's just right. But this is not a Goldilocks scenario. The middle is not just right. The middle is destined to be wrong. Not cutting could be right. Cutting bigger could be right. Cutting 25 basis points doesn't feel right. I think that we're going to see some volatility pick up, especially going into the first Friday of next month, which coincides with what we talked about yesterday. If our brain trust in Washington doesn't decide to play nice, I'm talking about the Congress and the senators, if they don't decide to play nice and make a stopgap deal on funding so that the government doesn't shut down, we've got a lot of things happening here at the end of the month. So I think volatility is going to pick up. And I think that as we approach the end of the month, we could see some stocks selling off. I hope that helps. This is Dan Passarelli, Trade Smart.